Kaseem here. Welcome to today's video. In today's video, we are gonna talk about moving averages. Okay, we're gonna talk about different moving averages. We're gonna talk about the 10 moving average, the 15, the 50, the 100, and the 200 moving average. So stay tuned. It's gonna be a fun educational video today on trading. So thank you for checking out the video. Subscribe, like this video, and yeah, let's get straight into the video. Everyone, welcome to today's lesson, today's video. So from last week, this is where we stopped. We are on lesson, I think this is lesson 4, if I'm not mistaken, lesson 4. We spoke about the Heikin-Achi chart, this actual candlesticks. We spoke about that in lesson 1. Lesson 2, we talked about the EMA. This little lines right here, those are the EMAs, and I use a 5, 8, and a 13. Yellow is 5, purple is 8, and this one right here is the 13. And in the last episode, we also spoke about these arrows right here. These are the MACD crossover arrows. So they signal you when you should take a long position or when you should take a short position. They're not 100% accurate, but they give you a good idea of what you should do. Like right here, this signaled you to go short. And at this point, you might be like, oh man, that was wrong if you had went short. But if you just let the trade be, you see it kind of like went up and it's back down from this position. So that's how you use it. At this point, it was a little bit wrong here. It was right here. It was wrong here. But then again, that's just the market. The market can just change all of a sudden, just because if a news come out or something like that, it can just change the market. It can just change, situation change in the market. So, but most of the time, they are pretty accurate, and using them together actually gets the job done really, really nicely. So in today's video, we are going to add a couple more tools that can help our trading, make it a little bit better and make it a little bit more understandable, so you can be able to tell different levels. These indicators that I'm going to add is going to help you understand support and resistance a little bit better, so you don't have to try to draw it all the time. It's just there for you. So let's get into it. To get this going, you need to go on edit right here, edit studies. To go on edit studies, put me over here. So you need to go on edit studies and go here, go to search and type in moving average, and it will come up. And we need a couple, right? We need a couple, but let's start with one first. I'm gonna put this one there. And we're gonna change the name. We're gonna change the settings up really quickly. We do it as we're going. So this would be a 10 moving average, and we want this line. We want this line to be like this, and you see why in a minute. And I'll make this, you know, make it a little blue, and we're gonna make this light pink. So let's say OK here, and click OK. Hit apply and hit OK, and we'll see. So this is actually a very good tool to use as well, because it helps keep you in the trade just a little bit longer, so you don't have to really stress too much. It helps keep you in the trade just a little bit longer. So usually, let's say this little line right here, those are the 10 moving average. That's the 10 period moving average, and it factor in the last open and close prices for the last 10 candles each time. So usually when the stock price, which is the candle itself, when it's above the 10 moving average, it would usually signify like a long position. So looking at everything together here, you see the arrow. Let me zoom this in a little bit. Okay, let's zoom that in. So yeah, so let's take this for example. As we look at the arrows, it basically like help us stay in the trade longer. Instead of getting out, we stay in the trade longer. It just helps stay in the trade longer. So usually when you want to get out will be when the 10 it's starting to be above the price. So like here you can get out, but I probably would have gotten out here because this was a nice, if you took the trade all the way and you were patient enough. It's really hard to stay patient during all these times, but if you were patient enough, I probably would have gotten out here because this was a big candle, or maybe here as well, or maybe at this candle. So that is that with the time period. It makes it really easy for you to be able to kind of like keep an eye on the general direction of the stock. So that is the 10 moving average. Up next, we are gonna add the 15 moving average. So move av comes up, and exponential, you always want to use the exponential one, and we're gonna change this to 15 period, and we should make this red. You can make it any color that you want, but these are colors that I use, and I'm just used to looking at them for the most part. So let's make that thick as well and go apply and say okay. So now we'll see another situation where we can visually see what's going on in the chart, and the trend, and we can visually see the overall trend of the chart, right? So this red one right here, that's the 15 period moving average, and this little dot, that's the 10 moving average. So usually if the price goes above the 10, above the 15, and the yellow is on top, and you have this signal right here, that could potentially be a nice long trade. Same thing here. Usually signals like this, and when the yellow is on top, this is below the 15 period, which is the red one. It's the price is above it. The price is above the 10 period moving average. If the price is above the 10 and the 15, usually it will keep on going up in price in general, right? Usually it will keep on going on in price in general. So that is how I tend to look at it. So if we look at this on a bigger view, zooming out here, as you can see, all throughout the day, this was pretty much a hold all throughout the day. And when the trend change was basically around this time right here. As you can see, everything kind of collide and switched from being above to being below the lines. So if we zoom in here for a little bit, you can see the 10, which is this dots right here, basically started kind of like being below. It wasn't pointing upwards anymore. You see our EMA, the EMA is right at the bottom, and then so at this point, remember, first of all, like this MACD crossover signaled first. So usually when that signal is like, okay, get ready to take a trade, that's the first signal that you're looking for. The next signal that you want to see is when the EMA also cross over nicely like this. When the EMA cross over and the yellow EMA is at the bottom. So this is the first signal that you check. This is the second signal that you want to look at when the EMA is at the bottom. And then ideally you wanna wait until the 15 also is at the top, right? So maybe it wouldn't be a good idea to necessarily take a trade here. Maybe you should wait Maybe around this point would have been a good time to take a trade, but you would have had to get out so you don't because this can potentially keep on going up, so you only trade what you see when you're trading. You trade what you see and trying to anticipate what could happen. Now, if you comfortably get into a short position here, right? If you get into a short position here, this is great that I'm doing this during market hours. If you get into a short position here and you're buying puts, or you're betting that the stock will go down, right here would be a very, very comfortable space for you to take a short, because everything is literally right at the bottom of the 20, right at the bottom of the 20 moving average, 20 period moving average. So when everything is at the bottom, it usually would signify that the price will go down later on, later on. Like same thing too with here, when the prices was on top of the 15 period moving average, on top of the 10 period moving average. Everything was basically on top. You can basically just kind of keep an eye on the trade and just monitor the trade really. So if you were able to take a trade here, and then this pushed up, this kind of come down, hits here and bounced off it, hit the 15, bounced off of it and kept on going up. This hit, bounced up and kept on going up. So around here would be a good time to get out, or you can just wait until it crosses over, then you can get out. Then you can wait to see when the chart will reverse again, right? And then around this area would be a good time to take a short position, to go short on the stock as well. So I hope you understand what I'm trying to say in the video. So to not keep the video too long, I'm only going to talk about those two EMAs. Today's topic covered the 10 EMA, right? It covered the 10 EMA. I mean, not EMA, moving average. This dotted line right here is the 10 moving average, and the red line right here is a 15 period moving average. And the general rule is, when price is above the 10 and 15, you only take the long position. So you only bet that the price will go up, right? And then when the price is below the 10 and below the 10, when price is below the 10, which is this dotted lines, as you can see here, this pink dotted line, that means you go short. When it's below the 15, which is a red line, that means you go short. Okay, so you bet that the stock will go down when it's below, and then when it's above, you only bet that the stock will go up. So from here, you only take the red trades, right? So that's pretty much it with this video. For a little bit of context, I always like to do this. Refer to an article down in the description below that you can read, because this video is educational video that is solely geared towards educating you about some of these topics that is very important if you are interested in trading. So moving averages are actually an important aspect of trading. You need to know what they are, how to use them, and all these things. So it's very important that you learn how to use them. So I'm going to leave this article in the description for you to read. It gives you all the details about all the different types of moving averages, their formulas, and all these things. But let me quickly play this video for you. This is a brief explanation of how it works, so you can get a better understanding in a couple of minutes on how to use it. So let's get into it.
Moving average is a technical indicator that refers to an average price for a particular trading instrument over a specified period. Moving averages are used by investors and traders to track and identify trends by smoothing normal day-to-day price fluctuations. There are various moving average lengths. A 20-day moving average, for example, calculates the average price of a specific instrument over the past 20 days. A 20-day moving average can be seen here as the blue line. Investors can use this line as a support or resistance level indicator and base trades around it. Moving averages are calculated by adding up the previous X number of periods and dividing that sum by the total number of periods. For example, a 5-day moving average is calculated by totaling the previous 5 days' price data and dividing by 5, a simple arithmetic mean. Each time a new period occurs, the moving average moves forward, dropping the first data point and adding the newest one. As a technical indicator, a moving average appears as a smooth, curving line that provides a visual representation of a stock's longer-term trend. Faster moving averages with shorter look-back periods are choppier. Slower moving averages with longer look-back periods are smoother.
So I hope you've learned something from that. That is just they do a better job explaining a lot more than I do, but I try to explain things in my way, so they can explain it in a more professional way. So that's why I show this video, so you can have an idea of what it is and how to use it and why I'm using it. So let's get into the next segment of this video. Be back in a second. Thank you for watching. I hope you've learned something from that short lesson. If you've learned something, please give the video a thumbs up. If you like what I'm doing here, give the video a thumbs up. Subscribe to the channel. Stick around. Got a lot more videos like this. A lot more lesson video like this set up to help everybody that don't understand charts or use chart. I'm just sharing my knowledge. This is how I use my chart. This is how I've developed it. You might think this is not understandable, or you might think it's understandable. I hope you find it understandable, that you can understand it and you can read it. It's pretty simple. I try to set up my chart in such a way that I just look at it and I can tell what's going on right away. I don't have to do too many analysis. So that's how I like to have my chart set up. So thank you for watching. Please subscribe to the channel, and I will see you on the next video. Take care. Love you guys. Love you all. Bye.